Hello, everyone. Welcome to another very interesting topic today. So, we have a very special guest with us, and his name is Akhil Dalal. He is based out of NCR. And Akhil की बड़ी interesting journey है. So, we are childhood friends, and Akhil is doing investing full time since the last 1 year, and he is pretty young. So, I think around 36, okay, around 35, 36, he will give his intro. So, he left his corporate job, and that also he is like a pretty IIT Delhi and MDI Gurgaon grad. So, very interesting journey है. So, what we will do today is ट्राई टू रियली डिग इन डीपर कि भैया ऐसा क्या हुआ लाइफ में, जॉब छोड़ दी, फुल टाइम इन्वेस्टिंग करते हैं, कैसे करते हैं, क्या गोल्स हैं लाइफ में, एंड व्हाट इज द रियल ब्यूटी ऑफ इन्वेस्टिंग. So hopefully it's gonna be interesting, and let's kick off. So Akhil, thanks for taking time, man. I think it's a Saturday, so appreciate that. So if you can start पहले थोड़ा सा इंट्रो अपने बारे में और your background और थोड़ा सा कैसे इन्वेस्टिंग की तरफ रुझान आया. So yeah, some intro will be great.
Yeah, sure. Thanks, Ankit. So I think as we spoke, we know each other since our school time. Uh, yeah. So basically, we are both Ankit and I are both from the same place. We lived in Rohtak for most of our early age, and then I went for undergrad at IIT Delhi. Then I did MBA program as well, and then after that I did around 11 years in corporate roles, different ones. Major part of which was spent in Boeing, different roles, and also a bit of experience in the consulting side. So yeah, it was quite a long, I would say, from my standards at least. I feel it was quite a long corporate career. I never thought that 10 years have just passed, and I've been doing this corporate role for such a long period of time. But yeah, I mean, just around a year, last March, I decided that I'm going to do investing as a full-time career myself, because I've been fascinated by this for quite a long period of time. And I thought last year was when I decided was the right time, when I had everything covered, and I was ready to take this leap into the next journey of my life. So we'll see. It's an early phase, but yeah, that's the story so far.
Nice, nice. Thanks, Akhil. So, would love to understand के सबसे पहले what was the first time you learned about investing या fascination about capital markets? So, if you can take us back to how it all started, and थोड़ा सा intro will be good on this.
Yes, sure. So I mean, majorly start हुआ था 2017 के आसपास. So till that time I had zero savings, literally zero. Uh, I was enjoying the peak phase, uh, corporate job. You're earning a lot of money, and then recently got married. So we were really living a normal, ambitious life. And then really till 2017, I had no clue about whether it's the saving or the compounding or investing. And it really started, interestingly, when I saw my father's provident fund statement, and I saw that he's been contributing his X percentage of his salary into the provident fund account since he started his job. And when I saw the statement, his monthly interest was more than my income that I was getting in. So I literally got fascinated. That was my first eye-opening moment. He never told me anything. He never pushed me anything. But just seeing that statement was literally had an impact on me. And I just tried to figure out what's going on, how this is happening, and things like that. That was my first fascination with the world of compounding. That literally your interest could cover way more than your salary if you plan your life and finances in a nice way. So that curiosity then started, and then I started learning about uh, how do I manage money, how do I invest money, and I was and to learn a little bit about different asset classes I investing, and I started very naturally with most of my asset class in the safe government securities or government bonds like my dad, and then slowly learned through various books about investing and how it is done. I wanted to make sure I have a system जिसमें risks are very low, coming from a normal background, and this is try to figure out a way where there is very less downside and you have a very substantial upside in the market. So I cover my base as well as also have a big upside of the equity market. So it all started there, and then I started learning all the classics of investing, came to know about the various books on value investing. And I think the one biggest thing was the concept of value investing hit me right away. I think I was fascinated by this concept that there are opportunities in the market to buy a business which is worth, which you can buy a business way cheaper than it's actually worth. So I had no such thought earlier in my career that there are opportunities like that in the market where you can buy a, a thing which has 100 rupees value for like 20 rupees. And this can happen in equity markets. This can happen, and that's where the big money is made. So that really pulled me up, and then it just hit me right away. And in fact, the COVID phase was the accelerator. So that 3 years, around 3 years of that phase, gave almost a full time transition to doing it almost on a full time basis and spending a lot of time energy on it. So that actually was a pretty good. I think the learning accelerated in those 3 years versus it otherwise would have taken a lot more time if I would have been doing regular 8 hour office job going back and forth. That's basically
Got it. Very interesting. So, Akhil, you touched upon, right, that your life started with understanding of compounding, right? And then you looked at different instruments of investing or wealth creation. So, can you also throw some light that what all things did you explore? Because you started very well ke compounding se start kiya. And I'm assuming, are you doing only equities now, which might be a mix? So, thoda sa if you can touch upon what were the different instruments of investing you tried, what were your learnings, and what do you do currently where most of your wealth is deployed?
yeah, sure. So I think as I said, because it started with my seeing what my father was doing, and I was naturally attracted to the provident fund first. And I was fascinated by this, that nobody knew that, and at least in my office, and I asked around 50, 60 people, and a lot of people were 10 to 15 years older than me, and that you have an option to basically put a lot more money than the minimum basics required in the provident fund, and that gives you tax free compounding around 8% per annum, and you can actually contribute a lot more from your salary, and that's just going to compound tax free. So that was my first thing, and I was quite surprised. Nobody knew it, nobody took benefit of it, and that was one of the low hanging fruits that I started just making sure my big chunk of my salary went straight away. I contributed to maximum, which is around 100% of basic is allowed that you can do. Now the rules have changed, so now the taxation government has started taxation on that. But when I was doing it, there was zero taxation on this. So literally, I went all in into that particular instrument till I figure out something else. I was not very comfortable with real estate because the big challenge was it required a lot of concentration. एक बार में 1 करोड़ डालना है, 1.5 करोड़ डालना है. I mean that never appealed to me. अगर एक decision गलत हो गया तो it may have a big impact on your finances. So majorly, and then I mean gold, and I was trying to explore debt funds and all that never strike me. Specifically debt funds and corporate bonds, because I realized कि मेहनत उतनी करनी पड़ेगी, अंडरस्टैंड उतना ही करना पड़ेगा कंपनी के बारे में, and you only, the upside is limited. So the corporate bonds give you 8%, 9%, or maybe 10%. You have to read through everything to make sure the risks are less, but your upside is only 10%. So why not just enjoy the 8.5% risk free? Unless it's something way high, then I'll be tempted to look into some instruments. So debt funds never attracted me. I was, and even today, till today, my portfolio is very kind of a barbell theory, jo anti-fragile. If you read that book, Anti-Fragile. So one is extreme safe, which is my solid government assets, and the next second is full equities. There is nothing in between, and I have a belief system that I would not basically take any risk for another 1 or 2% more than the safe assets. So for something to go into equities, it has to be way above. Uh, the return has to be way above to actually try to take that risk. So that's how it's very simple. So it's nothing appealed. So I'm still around, I would say around 50% of my wealth is still in the 100% safe assets. And then 50% of my wealth is 100% equities. Uh, I don't own any mutual funds or anything. I mostly pick companies on my own. So that's basically how it is structured.
तो इसमें क्वेश्चन एक है इंटरेस्टिंग अखिल, जैसे यू मेंशन राइट, आपने 2017-18 में स्टार्ट किया था, तो आज की डेट में वी हैव ए लॉट ऑफ प्लेटफॉर्म्स, लॉट ऑफ फाइनेंशियल टूल्स और अवेयरनेस इज देयर, जैसे आपको पीएमएसएस हैं, स्मॉल केसेस हैं, और एप्स पे सब फिनेंशियल आ जाते हैं. देयर इज लॉट ऑफ मटेरियल आउट देयर. So but when you started out, a lot of these apps were not developed, or this infra was not there from a financial platforms or ecosystem point of view. So कैसे करा था उस टाइम, मतलब how did you find stocks या म्यूचुअल फंड करे स्टार्टिंग में? What was the initial journey of starting direct investing, or what are the modes of equity investing at that stage? One sec, I think you're on mute, Akhil.
Sorry. Yeah, equity, you're right. It started with mutual funds. Actually, I learned from one of my colleagues in office who had a majority of his wealth in mutual fund. He basically explained me how it works and everything. And then I started with mutual funds. I started putting a little bit of amount in figuring out which mutual funds, and then really seeing and understanding the volatility which happens. So yeah, it was. I never thought that I'll be doing any particular stock picking specifically. So I was
Okay.
only attracted to the journey of compounding. I had no idea that this part of world, and because I was curious on compounding, so I started reading things. And till that time, I was trying to minimize my risk and take risk only based on my knowledge base. So I was mostly, as I said, in the safe assets, and then I started taking a little bit exposure in the mutual funds. And then then when I started literally digging into how stock market works, how the volatility is, what are the principles, how people have made wealth in the stock market. So then only I slowly started getting comfortable with it, and I started to taste the waters. And I didn't do much mutual fund. I would to be frankly for much period. It was hardly a year or so. But then I slowly started getting into individual companies, individual businesses, uh, and then yeah, a little bit of on the indexing side. So I was more comfortable. Then I realized the best way is to, rather than figuring out XOBs में से which is the best mutual fund, I was pain. So I figured out index fund is the best. So I just followed that rule and made sure अगर डालना है as a mutual fund type asset class, so I'll put it on the index. So I did mostly indexing, and then parallelly I was trying to get myself up to speed on how individual stock picking works. So that was majorly the way.
इंटरेस्टिंग. तो अभी अब ऐसा करेंगे अखिल, आई हैव जस्ट वन मोर क्वेश्चन. उसके
Yeah,
बाद हम दो सेक्शन करेंगे. तो एक सेक्शन होगा, विल ट्राई टू गो डीपर इनटू व्हाट इज अखिल एज एन इन्वेस्टर. ठीक है, कि आपका स्टाइल ऑफ इन्वेस्टिंग क्या है, एसेट एलोकेशन और पोर्टफोलियो मैनेजमेंट, इंडिया वर्सेस अदर कंट्रीज. तो एक को सेक्शन करेंगे, और दूसरा सेक्शन करेंगे कि यार आज की डेट में अगर कोई इन्वेस्टिंग स्टार्ट करे तो कितना पोटेंशियल है लॉन्ग टर्म में, और क्या क्या पॉसिबिलिटी है. तो वो दो छोटे छोटे सेक्शन करेंगे. बट उससे पहले आई लाइक टू आस्क वन क्वेश्चन के व्हाट वाज द पाइवोटल मोमेंट, क्योंकि यू सेड राइट, इंटरेस्ट आया, यू ट्राइड अ बंच ऑफ थिंग्स स्टार्टेड वर्किंग. व्हाट मेड यू टेक द लीप? क्योंकि आई नो के योर जॉब वाज डूइंग प्रीटी गुड, तब भी
Mhm.
यू आर एबल टू फाइंड टाइम इन इन्वेस्टिंग. तो ये थोड़ा सा मैं जानना चाहूंगा कि ये व्हाट इज द ट्रेड ऑफ इन गोइंग फ्रॉम से अर्निंग एंड इन्वेस्टिंग, क्योंकि एक तरह से कैपिटल भी मिल रहा है आपको, बट वो
Yes.
फुल टाइम जाना, क्योंकि दैट इज अ लीप व्हिच मोस्ट ऑफ द पीपल आर नॉट एबल टू टेक, और इवन इफ समवन इज कॉन्टेम्पलेटिंग इट इज वेरी हार्ड फॉर देम. तो थोड़ा सा उस पे इफ यू डिग डीप, आई थिंक इट विल बी ग्रेट.
No, I think fair point, Ankit. That was always a challenge because I had a very relaxed job, frankly. So I had a lot of time, and I was able to devote a lot of time in my, I think almost, as I said, till 2017 onwards. I was probably spending way more time on investing than my core job. So, but frankly, I've been an avid reader since I started working, and I always had a thought that I will consider corporate career as a stepping stone to finding something else. I had no clue what that would be. So that was always in my mind, and then I realized I had to prepare myself at least monetary to be able to take that leap. And then obviously the big thing is, what is that thing that will attract you to do as a full-time basis. So I had no clue about it, but I had never ambitions of really clicking through the corporate role for a long period of time. I was always considered it to be stepping stone. uh, I think the real pivotal point, as I said, happened during the COVID period. One of the big leap, the key decision point for me was, will I be able to spend 6 to 8 hours every day literally doing the hard work of reading about businesses, understanding understanding how a particular business is going through which particular journey. It's a lot of reading work. So will I actually be able to do it day in and out every day for a long period of time? And I think that when I saw myself COVID ke time pe 2020 to 2023 almost, and I became pretty confident that I'm doing it almost. I was doing almost as a full-time job, and I'm enjoying it, and I can continue to do this for even after this. But again, the it was tough point to see should I leave it because I was getting my salary, but then I realized that investing needs a very stable mindset. And when I was going through this decision making, I really realized that the mindless hurriedness of a corporate job, which something pops up all of a sudden, and I'm in the middle of some decision making, or I'm in the middle of reading something, that sort of hurriedness is not conducive to individual understanding what business is, because investing is a lot of psychology game. So how do you do that? So I realized that uh, I think I've reached my goals, to be honest, and this is the time. If I don't do it now, maybe I'll be not be able to do it again as in future as well. So yeah, when I reached my monetary goals, whatever I had, and found my calling, I thought it would be very unfair to not take the leap at this time. So I'll say let's give it a shot, and we'll see what happens.
Got it. Very nice. I'll add one more question before we go to
Yeah.
the investing section. तो मेरा एक क्वेश्चन है, तो इज दिस द गेम विच इज सो एंजॉयबल और इज इट द रिटर्न्स? क्योंकि आज के डेट में राइट कुछ कुछ ऐसे फंड मैनेजर्स हैं, पीएमएस हैं या स्मॉल केसेस हैं कि लिटरली आप 30-40% कैगर कर रहे हो 5-5 साल पे, तो बट या वो खुद करने का जो फन है वो गेम इतना सही है, तो आई वांट टू अंडरस्टैंड लिटिल बिट doing it yourself versus it's the game of returns. What exactly excites you more, and what keeps you like excited?
Yeah, I mean, you're right. I mean, there are a lot of options in the market. If you are just focused on returns, probably, especially in the early years, हो सकता है कि आप कितने अच्छे returns ना आए, because you are in the learning phase, and everything has a learning curve. So yeah, but as I said, the reason I found my pivotal point was not when I reached my money goal. It was when I reached the goal that I'm enjoying the process, and I'm curious to learn about how things work, and I'm literally getting up in the morning every next day, excited to sit on my desk. So that was always the first turning point. So I think yeah, for me, it's again, it depends on personality, and it's, as I said, it's not an easy. Everybody has their own way of working. For me, it was all about literally having an interest in reading a lot of material. As I said,
Very nice.
I've been reading for a long period of time. I used to spend a lot of hours since 2013, 14, my starting working. And then my father always used to ask, where will it, where will you use so much hours that you're spending in? And you never know. Then probably that kind of interest and that ease that I had in reading through a lot of pages every day that attracted me, and this found this natural course. So yeah, I mean, for me, I think return is an outcome. Frankly, what fascinates me in investing, couple of things. One, as I said, is it's about the longevity. There is no retirement in this. I
Totally.
I can get better at age 55, 60, when let's say somebody is working on a corporate career, suddenly retires and he has to figure out something else. So the curve goes like this, where it's going to go up, 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 up. Perhaps you will be at your best if you do well at that particular age, and of course the money will be an outcome. So I mean, exciting potential about the fact that you get better every day. We're doing what you like, and then obviously if you make a ton of money on the side, when there's nothing like that. So I mean, that's the way I look at it.
No, lovely. I think that's great. I would still add one more question, that because you mentioned a lot about the interest and like the excitedness, which is great. But is there any particular investor or some personality from the investing world who has really that you look up to or has shaped up your primitive years of investing?
Yeah, I mean, I would say not just investing, but the late Charlie Munger had a huge impact on my life. I think uh, w- what literally he had, because I had always an attraction towards absolute morals and absolute values and principles, and most of the people I met in life were telling me that that's not the practical way to live life. So you have to think about relative morals, or you have to think about uh, the absolute age old principles don't work in modern world. And here I saw somebody who was literally lived those, been successful, and got better at it. So he was frankly my teacher, my mentor, everything. I learned more about life from him, and of course, he was definitely one of the greatest investors. So a lot about investing in terms of how do you approach businesses, how do you look at some of the things, how do you become patient, and that's one of the things I think you asked before. What attracts me in this. Mentally and as a person, it makes me much better when I'm calm in terms of the things that are happening around all me, how I behave, how I react to situations. I mean, it feels good that if you cross that hurdle, and then you are able to take decisions in a lot of noise. So that helps. And I think there have been a lot of investors, of course, who I follow, who I admire, including Seth Klarman in the US, uh, Charlie, and obviously Warren has been the key people. But yeah, that's basically, and regularly we try to learn and read from other greats that are there to see what's their philosophy. Does it match mine or not?
Lovely, lovely. Awesome, Akhil. I think that was a very beautiful segue to the discussion. So now let's shift some gears, right? And we will try to go little bit into investing on its own, right? So we'll try to like have 4 or 5 key sort of questions. So I'll start with like, I think you did talk about the barbell approach, but let's
Mhm.
start with investing. So what is your style of investing? And what do you call yourself? Like, are you a value investor or growth investor? How do you like? What is your style of investing? We'll start with that, and then we'll slowly go deeper into how you pick a stock or how do you do portfolio allocation. So let's start with your style of investing and how do you actually build a portfolio.
Yeah, sure. No, I think I follow a very classic value investing strategy. And I think, as I mentioned in the earlier, when I read through the classics of Benjamin Graham, the intelligent investing and security analysis, that just clicked me right away. I realized this is something that is will be my way of style. So it's about finding mispriced opportunities in particular businesses that I can understand well. So uh, and it's literally uh, so as I said, because the book very clearly talks about how do you understand what stock is. It's a piece of business. What does that particular mean? How do you look at stock prices? How do you look at volatility? I think so the really the few basics that were covered in the intelligent investor just hit me right away, and I've been constantly following to my heart on that. And I think I've realized that whether it's growth investing or the growth stocks and everything, all of them fit into the value investing bucket, because ultimately the way you make money is if you try to find whether it's the slow growing business or it's very fast growing business, but it should be priced cheaply. Then you make a lot of money, because somehow the market does not interpret a company which is very fast growing, but let's say it's market is believing that it's going to grow very slow. If you're right in that, you make a lot of money. Similarly, some of the companies that market may believe that it's a dead company, but it's going to do well in future. So the asset could be priced extremely as a company which is going to die in a year or so, but there will be some opportunities that has been mispriced. So it's all about finding mispriced opportunities, whether it's in the growth companies which are growing very fast. So I have it in my portfolio, companies which are very fast growing, uh, and also the companies which are almost not growing, but they are taking actions which are going to add value to the shareholders as a businessman. So yeah, I mean that's basically the focus is on really finding businesses I can understand, because that's very very small. And as I said, with age that probably will grow. Finding businesses that I can understand, finding businesses that I can actually do the valuation. I can understand how this business will be valued if this has to be sold tomorrow, and then try to find that buy that at much lower price than it's actually worth. So these are the basics that the way we look at the investing.
So one follow-up question I have on this, Akhil. So you mentioned, right, value investing, right? That hey, the value is more, but then you said if the business is sold tomorrow. So do you look at the value today, or you look at the value, say, 5 years or 10 years down the line? What is the horizon in which you try to compute the value of the business?
Yeah, I mean, the value is for value of any business is today. So, as you said, you can look at it through, let's say, the ability of a business to generate cash flows in the future, which are discounted cash flows, right? So, the way I'm going to value a business today is its ability to generate what sort of free cash flow for its shareholders for a long period of time. 10 years down the line, it would have a different valuation. So if I'm buying a business today, and mind you, because the valuation includes the cash the company will give me, let's say from here till eternity. So growth will be a part of that calculation, but it will certainly come to a range of valuation. But we as buyer, because we know future is unpredictable, so I can't tell whether this will happen. It's my so you build a very strong margin of safety. If the number comes to you in your calculation around, let's say 100, you would want to buy the company for around 30 or so. Otherwise, we'll keep waiting for that uh, uh, the company to fall that price. That's the beauty of volatility. Someday it will happen, or if not, some sister company in the similar industry which you understand will come up to that valuation range. So that's the way we look at it.
Got it. Got it. That's interesting. So now, okay, we'll try to dig a little bit deeper into right this. So you talked about the concepts, right? The value, and you try to find values which have like higher value and they're available for a bargain, which may have elements of growth or they're just not priced right. So sort of some second level thinking goes into the process. Now,
Right.
can you tell like people who want to do this on their own, how do you do this? Like, how do you find some ideas? What are the tools which you do to read about these companies? How do you do your research? So if you can sort of create some framework or create some sort of skeletal process around how do you do it, that will be really great for everyone.
Yeah, I mean, it's hard to exactly put it into the steps, but yeah, I mean, I'll try to take a cut at it. See, basically, uh, as I said, and if you read, there's a very famous professor and great investor, Joel Greenblatt in the US, right? So
Yeah.
is is told very clearly, investing is all about doing good valuation work. If you can do a good valuation work and buy the company at cheaper price than it's worth, I think you will do well in this business. So everything comes down to doing valuation work, and and there are different actually ways of valuation. So for example, there are businesses which has a lot of different businesses in one particular company. And let's say it has four businesses: business one, two, three, and four. You can calculate the value of each business, and sometimes at a consolidated level, the market is not pricing uh, the overall worth of the company, because let's say one or two businesses are going through some problems. So the market really considers it to be very negative story, and then the entire company, even if the rest of the two businesses are doing exceptionally well, so that gets priced as if the company is almost going to zero. So things like some of the asset based businesses, for example, you can find companies which are heavy in assets. Let's say a real estate company, if it has a strong inventory of ready made apartments, it has good cash flows, and you can find some of the businesses, let's say which has real assets of 3,000 crores, for example. You can find some of those available at 500 crores. So that not only gives you margin of safety, because if you're wrong from 3,000, it is actually 2,000. But that gives you the margin of safety, but it also gives you a huge upside. So there are different ways, and but it's relatively easy, as I said, if you have a business which is predictable. If I can't predict a business 7 to 10 years from now, it will be very hard to really do the valuation for me. So let's another example. Let's say a broadband company who is giving you internet enabling services, cell phone and broadband businesses around the world. So if there are those companies, which is typically oligopoly market, you have a fair degree of confidence in what its earnings is going to be a few years down the line, versus let's say a purely technology business. In case if you don't understand that well, if there's a technology, because there's a lot of uh, elements in a technology business that you have to understand. So the it depends on the ability to predict a business. That's how you do good valuation work. Or sometimes you may have very good insights into specific industry because of your experience or because of your particular knowledge in that particular segment, and then you can do that work as well. So mostly around that. So even on the technology side, the businesses that I've had, I mean, the examples, whether it's the classic example in the US of Meta platforms. So some of those, so you don't need to actually do a lot of intelligent technology understanding to really evaluate the business potential and the valuation of Meta when it was trading at around 100 US dollars. There was significant margins of safety built in at those prices, and then you can. So it all depends, as I said. The cheaper the company is, I think there's a rule that I believe in. The cheaper the company is, the less you may need to be accurate. The more expensive it is, you have to be you have to do a lot more digging to make sure that you are not on the wrong side of the things, because the market, on the other hand, is also very smart. It's made up of great people around who are trying to do this full time. So that's the basic. We try to look at it.
Sounds good. So you took the example of Meta, right, Akhil? So I want to understand a little bit what is the spectrum of stocks or markets which you cover? Like, do you invest across globe or just US or India or whatever companies fit your framework? Say small cap, large cap, or certain sectors only you look at. So can you touch little bit upon the spectrum of stocks and sectors or the markets which you look at?
Yeah, sure. So I think I have. So the beauty of being an individual investor is there is no mandate that you can invest X percentage in this sector or in this country or geography. So I'm pretty flexible in that. So my approach is, as I said, is finding. I basically, a lot of work goes towards really looking through a lot of companies and rejecting them in a very short period of time, because sometimes I could not figure out what that business really is, and there are a lot of also such examples. Sometimes that doesn't excite me to be a part of long-term shareholder with that particular business. So what I try to do is really find best risk reward in that particular sector or industry or type of business which I understand, whether it's available in India, in Europe, in US. I'm not much worried about that part. So we do that specifically on that, and mostly it's right now it's most top down, I would say. Sometimes we look at where there is insanity happening in the market. So you will hear some industries totally thrown away by the market because you have so many stocks. How do you figure out which are you going to focus on? So right. So, but you will find examples, whether I'm saying about Meta or some of the examples in Indian markets, where some businesses will be thrown abruptly under the bus, and a lot of them would actually be on the right reasons. But that's where we try to channelize the work, and basically also to make sure that we have the best return on time as well, not just on money. So pick the industries which are suddenly have gone through a very strong negativity, or businesses. Try to figure out if that something works in our favor, and we can understand them, we can value them, and buy a good position in that. So that was the actual initial part for the last 3-4 years. Now I'm almost fully invested. So now my lot of my work goes into really strengthening my domain in businesses that I already own. So natural curiosity leads me. If I own a technology company, let's say, so I get to learn a little bit more about its competition, its nearby areas, adjacent areas. So it increases my knowledge and understanding of those areas. So yeah, it's so right now everything, a majority of the investments is done. It's more of really seeing them, observing them, slowly expanding them, and figuring out if there is some insanity happening in any particular geography, industry, or
Got it.
part of the market. Going deep down and see if you can figure it out. If you can't, then stick to what we have.
Interesting. So one follow-up question on this, Akhil. You did talk about, right, some aspects of asset allocation, but I want to know more on your views on concentration versus diversification, or how do you say if someone is creating their portfolio, they are, say they have some lump sum of 25-30 lakh, they want to add some money, say someone starting out from between age group of 25 to 30. So how can one think of like asset allocation and your views on how many are the right number of stocks to own?
Yeah, sure. So I think for general public and early age, I mean, I would not recommend. I know people recommend 100% assets into equities, uh, uh, because I've naturally evolved with significant portion of my wealth in the safe assets. So I would recommend people to start slow, because I think equity markets are extremely volatile. And for example, India, may right now everything is going much better. But if you look at the examples in the past, Japan, uh, in 30, 20, 30 years ago, what happened in the US after 2000 burst, what's happening in China right now. So there are periods when for 10 years you don't make a lot of money in equity. Sometimes they are below the government assets. One has to understand that these things take a lot of time, and expectations in a short period of time is not very healthy. Sometimes you will get a lot of money in short run, but sometimes that will be balanced by periods when there will be no money made. So that's because at the end, the law of averages, if you are in the index or in mutual fund, you will make money in the around a particular range. But that's important to understand so that you are able to actually visualize that can happen in your life. And if you're okay with that, you can go with a bigger portion in your equities, or otherwise keep a good amount of chunk in safe assets, which you can, if there is a worst thing, if there are very bad things happening for a long period of time in equities, then you can figure out, then you have another assets, another significant chunk of savings, which you can withdraw without touching that particular part. Because ultimately it's about focus is on making sure the equity portfolio is is well placed for longevity. It's not, you don't have to touch that. That should be the prime goal, and that's where it is. Yeah, for me personally, as I said, the barbell approach, 100% safe, 100% equities. The sorry, 1% of safe, and the rest fully in equities. And I do all stocks. So my portfolio is around 10 to 15 companies. I uh, actually try to, my ideal is 10 to 12. Right now it's around 13, 14. It goes up to 13 to 15 maximum. And I like concentration because of the fact that's the level of concentration I'm comfortable with. So that it basically makes a difference in my portfolio, but also uh, covers the mistakes, if any, on a particular company also. Yeah. And just right now, as I said, I'm invested in 10 to 15 companies where I like the company. I like the founders who are running the company, and I'm fairly confident that I can sit with them for a long period of time. Because every time you invest money in a company or market, you have to believe that 5 years uh, bad things can happen to the business, economy, or everything. So same thing in stocks with us. So am I confident that this founder, this particular guy, if worst thing come to him, I will be able to sleep well. So that's the sort of scenario we use. So yeah, I'm comfortable with the be comfortable with the range that one has in terms of the volatility in the stock market. So and I think everybody would have different levels. So right now, that would be my particular suggestion.
Got it. Got it. Very interesting. So, how often do you churn your portfolio, Akhil? So, you mentioned, right, you have a core portfolio of around 12, 13, 14 stocks. So, there's a lot of work which goes in, and now you do investing full time, right? So, there are a lot of ideas. So, I want
Yeah.
to understand how often do you churn and how do you keep your portfolio protected? Because today's world, right, there so many things happen very fast, and especially you do global investing, right? So many new pockets of opportunities come which may look very promising. So how do you, like, how often do you churn, and how do you like sort of manage these core versus the new opportunities which you think that, hey, this is really roaring, so should you add, should you trim down some position? So how do you sort of manage with so much happening across the world?
No, I think it's a fair point, and I think since I don't have a regular incoming monthly salary, any new ideas has to be funded by subtracting from what I already have. So that is always a question. But I would also tell Ankit, this has made me much more disciplined. When there was a regular monthly X amount coming every month, I would have done 30% work on a company and just put that money in, and because because I knew then another one will come up next month. But right now the stakes are higher. Uh, there is an attachment also to the business that you like, admire, and so this philosophy has developed. It's taken a time to reach the level where I'm comfortable today, where something literally has to be significantly more promising. We keep it at least 2 to 3 times more promising than what we already have in our portfolio. And then, as I said, obviously the first filter is, do I understand it? Am I fairly confident of the outcomes in this business few years down the line? The price so good enough that I would not lose money in this particular business. So yeah, the stakes are higher. Now being fully invested has made me, I would say, much better on that side. And then we try to do rough calculation of the current investment that I hold. This is the intrinsic value of the business. This is where it's trading at. This is the future potential. And we have a spreadsheet we maintain of 70 to 80 businesses in the watch list that we're looking at stock prices that if they fall will do something. And sometimes they have fallen, but I've decided not to do anything because I didn't find that promising that I touch my current holdings. So it is always a challenge, and I think that's part of the mental game. There is no right answer, and I will do make mistakes. Sometimes I'll do exceptional things as well by taking right decisions. So I think that's part of getting better in this. So the way we try to do is just learn more and more. That's what we do as a full time job now. That learn more and more about new businesses, expanding that area of knowledge. So something tomorrow happens in that particular business, I'm ready to actually take an action rather than uh, doing nothing on that.
Very interesting. I think that was pretty nicely put. So I think I will sort of now get to the other part, which is the I think we covered a lot about investing and portfolio allocation. How do you keep your stocks? So is it fair to say, Akhil, that your favorite holding period is forever, or do you like how do you see कि अच्छा यार अब 5 साल हो गए या मेरा potential reach हो गया stock का? Because there are some companies right which keep doing well, like you may hold them for 10 years, 15 years. तो क्या mindset रहता है कि कब तक एक stock को you want to hold?
See, I think the first thing during the buying, a lot of such decisions are made. So buying के time पे we make sure that when I'm buying a company, at least there's a lot of time uh, that it will take till I need to make a decision. So let's say if I buy a great company, which as you said has a potential to compound your capital for a long period, right? It will retain its competitive advantage. The owner is smart that it will make smart acquisitions. It can do it for next 15, 20 years. So that is one side of portfolio. That's actually pretty good. And unless there is ridiculously overvaluation, if we think that it's people are gone mad about this is not the right worth of this business, we I'll probably not sell it. And the second part is, as I said, extreme undervaluation. 1,000 rupees thing is available at 100 rupees. So that time I will also that time I'm also okay to not to worry much about the business quality because the extremity is so much. I don't need to do a lot more work about the ability of the business to make a lot in the future because currently also it's extremely insanely priced. So in both these scenarios, from 100 to 1,000, if there is such miscalculation in the value of the business, then it will take a good amount of time to reach that value. It'll take 3 4 years naturally to reach that value. So the buying process is itself designed in a way that whatever asset I buy, whether it's a compounder, it is naturally made to hold for a long period, or I'm not looking to buy something which is to double from here because then I'll need to take a decision every 6 months or maybe 2 years, depending on whenever it goes double. So at least you have a confidence that 3 4 5 times you don't need to think about it before that. So minimize the decision making and actually continue to do the work on the website. So churn is, I would say, pretty relatively low. I've eliminated if probably in the last 2 years just a couple of positions, and that happened because there was in the similar industry in the similar company. I found one other company as an example, which was one fourth the price what I already held in my portfolio, and that had already given me good returns. So I basically decided to sell it off and basically buy it with the other. Otherwise, yeah, the aim would be not to mess around much on that.
Got it, got it. Do you also keep taxation in mind, or you don't worry about taxes when you are churning a portfolio? And especially asking because if the portfolio size becomes big, right, then you have more capital gains to pay. So
Mm.
does that also cross your mind when you churn your portfolio?
I mean, try to do that a little bit. Jitna possible hai. For example, ways to basically harvest tax losses when you're booking. Uh, then let's say if I want to sell a security, you can try to take care of the financial year. If you can wait for a month or so, and you can sell it and hold for that particular idea. I've learned it's not a great strategy. At least that's I've learned from the investing grades that shouldn't worry much about taxation. But I'm yet to get better on this. So, but yeah, do keep in mind, not much, but still do,
Got it.
and try to avoid that. But you're right, when especially the gains come in multiples of what you paid, the taxation suddenly shoots off the roof.
Correct, correct. Awesome.
Yeah.
Cool. Awesome, Akhil. So what we'll do now, we'll switch gears, okay, and go to the last part, which is like post fire stage. तो थोड़ा सा if you can help us like understand के पहले तो बेनिफिट्स काफी सारे तो समझ आ गए, राइट, बट इफ यू कैन टेल के क्या क्या बेनिफिट्स हैं और क्या क्या चीजें हैं कि यू थिंक यार यू आर मिसिंग आउट सर्टेन थिंग्स व्हिच वर देयर व्हेन यू वर वर्किंग और यू हैड अ कॉर्पोरेट जॉब. So if you can walk us through मतलब pros and cons of this like full time investing life, that will be great.
Yeah, sure. I think, yeah, I mean, so now almost a year. So this is actually a good time to revisit. And I've been doing a lot of introspection, how things have happened over the last 1 year and आगे क्या क्या plan है. So yeah, I mean, I think one of the biggest differences here is corporate job is mostly autopilot. So the tasks are assigned to you, and you don't need to worry much about it. And so think, I mean, you don't need to bring up a lot new things into. You don't have to overthink things. Most of the things, 80 to 90% things are laid out for you that you have to achieve in next period of time. And there are set goals every year. You basically are judged, or uh, you're basically graded on that particular point. So those parts are sorted, I would say, in a corporate job, which is not here. So they have the what you have to do every day is also to be set by ourselves. उसको कैसे evaluate करना है? Do you become hard grader? Sometimes I become very hard. Sometimes I become very soft grader. So what is the natural way to grade yourself on how you've done over the last 1 year? So those parts are tricky, I would say. It's not easy, and that's certainly been challenging. But I think it's also a very smart way to grow in life, is to you if you can reach that particular level where all of these things you can think about, uh, how do you do things on your own and how do you grade yourself.
Got it, got it. Interesting. So what is the biggest challenge which you have faced after you are doing investing full time?
I think for me, it was primarily about making sure I don't overspill the investing into my personal life, frankly, because I've been working a lot more with a lot more passion and a lot of more hours now when I actually ever did in my life. So that part has been challenging. It had been in the past, but at least for the first 3 6 years, you're sometimes you're overly charged up when you try to do some new things, right? So it actually spilled up. I was doing it almost since up in the morning till late night, and doing so now it's a pretty healthy balance. So basically, how do you develop a good routine? So challenge was developing a very very balanced routine, I would say. So there are set weekends, there are set working hours, there are set time with family. So those sort of things were a little bit I was struggling in the initial few months. But yeah, I mean, right now I think I'm happy with the how things are going on, because now it's a very well developed routine of the time spent on reading about businesses, tracking portfolio companies, whether it's the news or macro and any other things. And I choose work. The best part is obviously I choose my work weeks. I choose my schedule is totally dependent on the requirements of my family, or if there is, let's say, if there is school holidays for my kids, so I can choose to not to work for a week and then really step up the gas on the next week. So that really helps. And now I'm getting better at, when I'm off, let's say when I've taken a work week off, then I'm literally not thinking about investing or anything at all. So that's been so I think the good part is definitely this, the freedom that you get to operate your way. There is nobody to disturb you for things you have planned for the next morning, and you literally can execute on your own plans without any distraction.
I remember वो नवल रविकांत का एक quote था, right? You are successful in your life if you manage your own calendar. So I think the freedom of time is the biggest thing which one can achieve. So
Definitely.
and also, right, I think you have taken an office also, right? So you do go to an office
Yeah,
space.
absolutely. So yeah, I mean, taken an office, and we follow regular routine of try to do Monday to Friday, and sometimes I take a couple of weekdays off. Then I'll try to maybe go on a Saturday. So yeah, I mean, 4 to 5 days. I don't try to do more than that a week. And then yeah, for the weekends it's general casual reading about just things to get better on, and other things mostly. So yeah, that's the best part. I really enjoy the freedom when the weather is nice outside, like what is right now in Delhi. So this 1.5 months, I'm a little loose on sitting in a closed room. I can go out and spend much more time in the sun. So I do that. So that's a good part as well.
Lovely, lovely. So, any advice you want to give, Akhil, to people who are, say, young and planning to fire, specifically in a young age, anyone between 30 to 40? What is your advice to folks?
Yeah, I think the fire, Ankit, you touched on the last podcast as well. I think I would say don't focus on the RE part. I mean, fire is literally not about retirement. It is about finding the next thing for you. And that should be the focus for the entire movement, whether it's the money that we are trying to compound. It's finding something which you can do for the rest of your life, or finding something that you always wanted to do of your own, if you have that sort of ambition. So it's really focusing on finding the work that you like. I think we're so lucky in this age of internet. I still find it unbelievable that I can sit here, read about a business trading in, let's say, Madrid, and understand it, and try to value it and buy it, and sit in Delhi and do that. I mean, this is just an enormous age of opportunity right now, and to really figure out some of the thing which is exceptional. So yeah, for me, it's all about advice on the fire side is all about finding the right thing which one is passionate about and dedicates one energy, and it's really about standing for what one believes in. I think that's where the biggest satisfaction will come. Everybody has its own ambitions, its principles, its values. How do they see the world? And with fire, you can create that structure. There's nobody else to be blamed for. You literally have a control of your whole life and how you design your environment. So that's basically. And I'm not a big fan of I would say hitting a particular number and say on a fire size. Uh, I know there are some very good right-hand rules, and which are fairly okay, but most of them are designed for people who will retire in 60s or 50s. I think if somebody is thinking of it at mid 30s or 40s or early 40s, I mean, one should not discount the human capital, the net present value of human capital. So even if you retire, because if you retire, you will do something. If you don't do something, then anyways, life is not good. And if one retires and if does something, then you'll make a good amount of money as well. So that part of equation, if somebody is thinking of fire at an early age, so that the value of human capital, the value of our talent over the next 20-25 years is sometimes not calculated in that equation. So that was for me. I never hit the real fire number that is given. I try to give some marks to our own ability to earn in the next 25-30 years, and literally pushed a little earlier, uh, on the sense that I have the opportunity to do that as well as enjoy and design the life once I reach a
Lovely.
comfortable milestone. Yeah.
I think that was very beautiful. The human capital part, right? I think people don't think about it. So that was a great input. So would love to know, Akhil, like, so right now you are managing like your own money. What is your future plan? Like, do you want to get into wealth management full time? Say, run your own like a company like a Helios or maybe much better. In fact, I met Saurabh Mukherjee a few days back. So though I did not like some of his talks, but he is running like a 8,500 crore AUM business now. So what is your future plan, or you just want to do investing on your own?
Yeah, actually, yeah, it's a good question, and I think we've gone back and forth on this, and I've attended a couple of good conferences and meetings where different fund managers been there, and it's fascinating that I was surprised that people who are managing 5,000 crore, they are saying, yeah, they ultimately want to do what I'm doing, just manage their own money. Because I learned that it's a job. It's like a corporate job. Your client is calling you. You're running on the hill. You are literally. So I was not aware of that, but I attended a few conferences, and I literally got to hear the other side better. I mean, it is not less than a job. It is a if you enjoy that part, I mean, that's definitely one, but it's not a freedom. It's you are literally and you're managing money of somebody, not just anything else. His savings, you're accountable to him. You're accountable to basically telling him what to do with the volatility and things like that. So I think I'm not really sure right now. I'm taking basically mentorship from few people in terms of is that the right way in the future. So we'll see. I think I'm not made a decision. So far I'm enjoying and I'm focused on basically getting my craft a little better.
Lovely, lovely.
So till the time, that's fine. I mean, I don't need to look into it right now.
Awesome, awesome. I think that was great, Akhil. So, Akhil, I'll ask one last question and we'll wrap up. So, you said, right, you talked a lot about reading, that you had love for reading and started reading a lot about investing in the last few years. So, can you tell like 2 to 3 books which really, really impacted you very deeply and you can recommend to the viewers? So, that will be a good note to end this particular session.
Yeah, sure. I think few things have had a huge impact on my life. One, I think, is, as I said, Charlie Munger. If anybody wants to read about the way he lived life, way he admires, so that's obviously, I've read almost everything he's written about in his life. Everything is available. Second, I'm a big fan of the book Anti-Fragile. It's written by Nassim Taleb, who's also written a book called Black Swan, and that's basically it's a way how do you design your life to be anti-fragile. Anti-fragile is somebody who actually benefits from volatility.
Wow.
And in every aspect of life, whether it's job or it's any situation in your society or your home or your money or portfolio, everything like that. So it's a beautiful book. I think I've literally enjoyed it. And I think the third part that I'm always fascinated is about doing great work. How do you literally design your life, do really good work that's your life's passion? And there are a couple of people I admire. I think one is Seth Godin. He writes blogs. He has a lot of books written about how do you do great work, how do you actually ensure that the resistance, the laziness, that you don't let that happen. Don't take the easy route out in life. So I'm fairly inspired about that particular point. I do recommend if somebody is really interested in bringing very high quality into everything that they want to do in their work in life. It's just a beautiful way to think about the value of work in somebody's life. So that's basically the 3 parts of it.
Very nice.
Admire.
Awesome. I think that was really, really awesome, Akhil. Thank you so much. And hopefully we'll catch you again for some interesting nuggets from the world of investing and continue to inspire a lot of people and make a lot of money in the process as well. So thanks again for your time.
Yeah, thanks,
Thank
Ankit. It was fun. Yeah.
Awesome. I'll stop the recording.